If a Bitcoin was the size of a quarter, all 21 million of them would fit inside a single shipping container. But to fit the dollars the Fed prints on average every day, you'd need 72 shipping containers. Each year, you'd need 26,280 containers. And to fit what they've printed in the last decade, well, you'd need a lot more than that.
Bitcoin is a first cryptocurrency of its type where it's decentralized. It doesn't have a governing body where, let's say, for example, banks, you can get to your particular bank and have someone that's there that can help you with your transactions and help you move money here or there. With Bitcoin, it was a network where a network can distribute money between two entities. It's much faster than, let's say, what we had before, where it was Western Union, you want to send money to India, at least 1 week to a few more days. And this is what we're talking about in the early 2000s. Bitcoin could do it within an hour. At that time, that speed was much faster. But now, coming to terms with today's speed, the question is, why isn't money able to move at the speed of communication? The way we send emails, within a few seconds, we can get an email from anywhere in the world as long as we have a network connection. So the process of Bitcoin was something similar to that, where as long as you have a network connection between two entities, you can send money from one place to another. So early Bitcoin history was made by a pseudonym of someone called Satoshi Nakamoto, but we don't know if it was one person or many people. What that person or that entity did was it allowed us to see how blockchains work, how decentralized network-based blockchains work, where money can be transferred from one place to another as long as you have a wallet that's using that ledger or that network. So Bitcoin wallets, you can store your Bitcoin, you can buy it from an exchange, and then you can transfer money from one place to another and have transactions on it. What makes Bitcoin different? What makes Bitcoin different is that there's only 21 million Bitcoins. And being in the digital age, we have it fractionalized. So we can have 0.000001 of a Bitcoin, and that can still hold value. So you don't need to buy the entire thing, you can buy a fraction of it. With that comes also, how is Bitcoin made? So there's 21 million of them, and each 4 years there's a halving period. So halving is when a certain amount is able to be mined. So first we start off with, let's say, 21 million, and then we half of that, then half of that, and half of that. So every 4 years there's a halving. So those become available to be mined. What is mining? Mining is the process of using computers that can solve mathematical problems, which if you get the correct response, then you get an amount of Bitcoin.
Crypto mining in the Arctic Circle. Bitcoin's had its fair share of ups and downs over the years, from rallying 13,000% in 2017 to crashing 70% the year after. But through all this, one thing has stayed the same. Without miners, there'd be no Bitcoin. Of course, mining crypto isn't like mining gold. There's no diggers, no explosives, and no smelters involved, though there's a fair bit of heat, and we'll come back to that later. Let's rewind to 2008, when the mysterious Satoshi Nakamoto published a white paper containing the template for the birth of all cryptocurrencies. It explains the process whereby electricity and CPU time is spent in a process that attempts to solve the problem of sending money across a distributed network, removing the need for intermediaries. Effectively, it seeks to solve the problem of trust in a digital era, and to do so, it relies on a concept called proof of work. Like old-fashioned gold miners panning for metal, these CPUs have to hunt for a hash that allows them to write the next block on the blockchain and then get rewarded by some freshly minted Bitcoin from a pool that's designed to never contain more than 21 million. Now, in the early days, anyone could mine Bitcoin. All you needed was to install some software on your home PC or laptop, and off it went. Early adopters sometimes saw it more as a computer game than the start of a financial revolution. To mine Bitcoin requires specialized equipment and a lot of electricity. Because the rate of production of Bitcoin is fixed, but the CPU power expended on creating it is not. The variable that keeps it all in balance is the difficulty of mining. As more people compete for each new Bitcoin, the level of difficulty is increased. And that creates one of two routes to mining Bitcoin. Either wannabe miners can join conglomerates called mining pools that work together to solve the puzzle, or they can set up vast server farms that use graphical processing units over CPUs for their greater number of cores. Such server farms have two problems. First, they need a lot of cheap electricity. That's pushed some to set up shop near hydroelectric facilities, the cheapest and incidentally one of the cleanest forms of energy. And second, all those computers need cooling. This is Decrypted. I'm Eddie van der Walt.
How centralized finance came into Bitcoin, or is slowly coming into the space of Bitcoin and cryptos. So we have ETFs. So a company that's a high valued company that has assets under management needs approval from the SEC, the Securities and Exchange Commission. Once they have the paperwork that says we want to hold Bitcoin or we want to make an ETF, exchange traded fund, and these ETFs need to be documented and submitted to the SEC for approval. Once they are approved, then that company can sell stocks of Bitcoin. So they're not actually selling Bitcoin that you're custodying. They have their own reserve, which they're selling from, and they're making sure that the security is there. They're making sure that they're the ones that are keeping track of what's going on, how the transactions are based. So now we have an idea of old school finance coming into Bitcoin, where it's not the holder, but it's holding it for its customers. That way they can be insured if anything happens to the money, and also be able to capitalize on the gains that Bitcoin has made. So right now, about a few days ago, we had Bitcoin reach its all-time max. All-time max just means that it's, until now, that's the maximum that it has gone to. On May 22nd, Bitcoin reached its all-time max, which was 111,000. So within a few years, it went from being a couple cents to a couple hundred to a couple thousands, and now it's 111,000 was its max. Fluctuation does happen, and it is a very volatile asset where supply and demand makes it move really quick. Having the ability to have an asset like that, why do we see old school money trying to come into cryptocurrencies such as Bitcoin? We see that because, unlike Bitcoin, money with the Federal Reserve was very much just printed whenever we need it. Paisa ke paisa. So we have a deficit, we print. We need more money coming into the market, the Federal Reserve starts printing. So with the supply of only 21 million, the reason why it is held valuable is because there's a set amount and we cannot add to it.
Trillions of dollars in assets under management, and registered reps all over the country, financial advisors, can now put people in Bitcoin. We knew it was going to make it go up. We knew the Trump administration was basically friendly to crypto. This was such an inevitable move. That's why it's gone higher now. That's probably why it's going to continue to go higher, because Bank of America, for example, the biggest bank, has not yet made that decision, and they are bound to.
Talking about ETFs, which companies held ETFs and what does that mean with them? So after the SEC approves an ETF, then those companies can start custodying and selling those ETFs.
All right, so let's talk about these ETFs. We'll talk about 3 ETFs in particular. All right, so the first one is IBIT. IBIT is BlackRock's iShare Bitcoin Trust ETF. The assets under management for IBIT are 71,415 million. Previous price of IBIT was about $58. IBIT is under BlackRock. So BlackRock CEO is Larry Fink. He became CEO around 1988 and has recently changed his adoption for cryptocurrencies. Because previously he was very skeptical about it, but slowly he has changed his stance on it, and his estimated net worth is about 1.2 billion. Second ETF is FBTC. This is Fidelity's Fidelity-Wise Origin Bitcoin Fund. FBTC has a total assets under management of 20,578 million. FBTC previously closed around $90.63. FBTC falls under Fidelity's CEO Abigail Johnson. She was CEO since 2014 and had been an early advocate for cryptocurrencies at Fidelity. Her estimated net worth is about 33.9 billion. GBTC ETF by Grayscale Bitcoin Trust ETF. So GBTC's total assets under management are about 19,415 million. And their previous closing price was about $81.70. This is Grayscale CEO Peter Mintzberg, and GBTC falls under Grayscale. Peter Mintzberg was appointed CEO in 2024, previously held roles at Goldman Sachs and BlackRock. And he's been slowly expanding Grayscale's ETF offerings.
With this, we see that old money is trying to come into the space of cryptocurrencies, and how money is flowing from where you can just print more money versus something that's a little bit more stable, where the amount of the total max is the same, but the value that we put to it increases, decreases, and fluctuates. So with that being said, we know that the SEC has laws and regulations that allow it to custody cryptocurrencies. The first of its kind is Bitcoin. That's where we already see ETFs being signed and agreed upon. But recently we had the Bitcoin 2025 conference happening, and in that there were a lot of speakers, and speakers that have the ability to make regulations, speakers that spoke on behalf of other countries. So let's take a look at which countries are possibly engaging into Bitcoin. So the first two countries that I know off the top of my head which have the largest reserve of Bitcoin is US being the first, and China being the close second. With that being said, it's a race towards financial security, and I see a race between US and China with also AI agents and other aspects with it. So this idea of cryptocurrencies previously were told by Jamie Dimon and Larry Fink being only used for criminal enterprises, money laundering, anything that's bad, that's how Bitcoin was used. Now we see a shift in that change as well, where they're openly talking about custodying, tokenization of assets, and bridging assets and money back into the flow where you can custody it for the customers. So we see a shift between these large money players into cryptocurrencies.
Oh, how times have changed. 4 years after calling Bitcoin worthless, JP Morgan CEO Jamie Dimon says that clients can now buy the cryptocurrency, but it doesn't mean he's buying it himself.
I am not a fan of it. We are going to allow you to buy it, and we're not going to custody it. We're going to put it on statements for clients. So, I don't think you should smoke, but I defend your right to smoke. I defend your right to buy Bitcoin. Go at it.
Go at it, right? Jamie Dimon, who also called Bitcoin a pet rock, understands that personal feelings can't get in the way of business, especially not while business is booming. Bitcoin topping records today. You have it above 111,000 per Bitcoin. This is as major crypto regulation bill advances now into the Senate.
And slowly we are also seeing countries try to hold it for their reserve, and also states starting to use it as their reserve. So the Texas House of Representatives have passed a bill, SB 21, that seeks to establish a strategic Bitcoin reserve. The bill will now go to Texas Governor Greg Abbott to sign into law or veto.
The conference committee report on Senate Bill 21 recognizes Mr. Capriglione to explain the report.
Thank you, Mr. Speaker. Just quickly, first we removed Section 403706, which detailed the voluntary donations to the reserve. And then, secondly, we kept Representative Garcia's amendment that moved the market capitalization for eligible cryptocurrency, where currency must have a market cap of $500 billion for the last 24 months. And finally, we removed the ability for the reserve to engage in staking in loans, only permitting them to hold, to have cold storage bitcoins or trade derivatives if they see fit. The reserve may still work with the qualified liquidity providers to accomplish purposes of this bill. It is for this reason that I move the adoption of the conference committee report.
Representative Capriglione moves the House adopt the conference committee report. Record vote. Clerk ring the bell. Mr. Capriglione voting aye. Lujan voting aye. If all members voted, 110 ayes, 25 nays, the conference committee report is adopted.
We see changes happening, and we see all the large countries, asset managers starting to shift in their ideas of this holds value, and now we can invest into it, or we can slowly start to ease our clients to understand it and see for themselves. So this just goes on to show that big players are slowly easing into crypto and how to tokenize it and how to custody it for their clients. They know that people want to be able to hold it, want to be able to see their money grow in value. And BlackRock, Grayscale, and Fidelity have all three been approved for their ETFs and currently have the ETFs in market where you can buy them.
Every day, the Fed prints an average of $465 million. That's 26,000 shipping containers a year, created out of thin air. Maybe that's why the dollar loses value over time. But there's one thing they can never print more of: Bitcoin. At the size of a quarter, this is all there will ever be. Shouldn't a store of value hold its value?